Hey everyone, it is Evan here from the Trade Risk on Friday, August 30th, here with a weekend market recap video. We're going to cover all of the major markets, the current market environment, and finish off looking at some sector analysis. So what a difference a week makes. Last Friday, we were all staring at the minus 3% session to go into the weekend, the ugly looking headlines, the bottom of the range that we were about to retest. And now here we are 1 week later, back to the top of the range, no follow through from sellers, and things are looking bright again. So let's jump into the dashboard, take a look at what went on here. You can see Friday was a pretty dull day. It was essentially a flat, choppy day for the market's smaller range. But the 5-day performance, take a look at how strong this is over the course of this week. We basically recovered all of Friday's selling, last Friday's selling that is, and then some. We are back above the 10 SMA across all of the major indices. We are still below the 50 SMA, and the IWM is still below the 200 SMA. But overall, we do have a nice pop back up to the top end of the range. We'll look at the charts in just a moment. When we take a look at sector performance, it was semiconductors leading this charge to the upside, 4% over the past 5 days, followed by Dow Transports and Industrials. And on the downside, it is biotech, it is utilities and staples. Defensive for those two. Biotech, not sure what that excuse is, but we'll take a look at the charts later today in this video as well. When we look at major markets, we had natural gas up almost 6%, silver up 5%, emerging markets up 2.75%. We saw a 6% unwind in the VIX, gold down, and the 10-year up just slightly here, but still positive. So let's get into the actual charts now. This is the S&P 500. This is the weekly time frame, and this is the cash market. So we always like to start our analysis, and we can see here, looking at this week's candle, we are now back to the highs that we've been dancing around for all of August. It's been exactly 20 trading sessions where we've been essentially mulling sideways in this range between, call it 28.25 and 29.50. We are back to the upper end of it. You can see we were as high as 29.40 this week. We backed off just a little bit here on Friday, and we closed once again, let's see, almost an inside week. If you want to be super technical, we did overshoot last week's highs by just a little bit, but almost a back-to-back inside week here. But I think the concept is really still kind of fully here. It has basically been a month of going nowhere as the market has chopped around. If you're following the day-to-day action, of course, it's been a yo-yo up and down, but you can see structurally here on the weekly chart, there hasn't been any breach of these highs or lows for the past 4 trading weeks. So that's what we're waiting for. That's what we're looking for now. Just as we said last week when things looked bleak down here at the lower end of the range, will we get the breakdown? Will we get follow through? Will the second move lower start to happen? Those were all the questions we were sort of asking last week. And now, of course, it's just the opposite. Well, can we now actually get the breakout here, or are we going to get another rejection and continued choppy price action into the end of the week? Now, one of the encouraging things that I want to take a quick look at is if we open up our stock charts here and take a look at the cumulative advance decline line on the NYSE. This basically just treats every stock with a vote of 1, and as every day goes by, did it go up or was it down on the day? If it goes up, it gets a check marks in the up column. If it's down, it gets a check mark in the down column. We tally all of those up and we keep a running cumulative total, and what you can see here is that we are actually breaking out to new highs. And notice that this isn't a break of the recent consolidation, right? So it's not a break of this range here. It is in fact an actual break to new all-time highs. So what this tells us is that we have leading market internal measures here, in this case the advanced decline line, that is suggesting here that liquidity is strong and that there is no problem to sort of speak of in this current uptrend in this market. That is a bullish, very constructive sign to have as a backdrop, as a data point. Again, there are no guarantees in the market, so we can't go buy blindly everything and go on margin and expect that this is only going to work out to the upside. There are, of course, risks, but this is certainly a very positive indication here as we have markets back to the upper end of the range. To me, this has the suggestion, of course, that we would want to resolve here to the upside in the near future, but we will need to see if that can actually happen. So that's the positive. The one sort of maybe downside, I would say, if we want to kind of stay balanced here and objective as possible, is that if we take a look at the VIX really didn't totally unwind here. So in other words, we had a nice pop, a nice rally throughout the course of this week. The VIX was only down 5%, 5.5%. So we didn't get the total kind of drop back down to these sub 16 levels. In fact, we're still holding on to almost a 19 on the VIX. So that's kind of curious there as markets test and get back up to resistance. We didn't see more of an unwind here in volatility. Maybe it's the long weekend because markets are closed on Monday, which I forgot to mention at the top of the video. So maybe there's a little bit of extra because we have the extra day close. There's a little more kind of fear and protection that stays bid in this market, but something to consider, something to keep kind of that outside, kind of balanced mind. And we'll go out of order today, and to kind of stick with that theme is if we actually look at something like the TLT, which is generally seen as a safety haven in terms of market volatility, this hasn't really given up the bid here either. Both the VIX, both the TLT here are staying fairly firm. You can see the uptrend is in place. We had this 1-2 day, kind of had this exhaustion gap up here on Wednesday, and then we had a little bit of follow through on Thursday, and then we kind of rebounded a bit on Friday. But you can see mostly this is still holding up pretty strong. So when we think about where the market is, where volatility is, where TLT is, something seems like it has to give here in the near future, or something is lying, so to speak, and we need to get to the bottom of it and see how this market ends up resolving. But long story short, we are back to the top end of the range. We're going to see if this fourth time is a charm to finally break out to the upside. We got strong market internals and a little bit of suspect there with VIX and treasuries. If we go to the IWM next for our major indices here analysis, you can see this is also back towards the upper end of the range. The pattern here is developing a little bit different for IWM. We'll stay to that view. We kind of have this downward sloping channel that has basically been in place here over the course of August. We haven't got sort of that flat line to the downside. We have more flat horizontal levels for S&P 500 range. This has been more so making slightly lower highs and lower lows throughout this time. So we're back up to the upper kind of trend line here. And again, it's sort of in wait and see mode. Now, the other positive, I forgot to keep it, the other positive I wanted to mention there for both the all major indices, frankly, but let's kick it back to the S&P 500, is take a look at the MACD on the top pane of my chart here. You can see that as we are back to these recent highs here, you can see also that the MACD is leading to the upside. It is still in negative territory, but it shows that momentum. It just wants to try and unwind and start to ignite here to the upside. So that is also an encouraging technical development there for the markets as they stay range bound. So S&P 500, IWM, same thing. If we go to the Qs here, also you can see back up to the top end of the range. You get a leading MACD as well. Volume was light this week. We'll see again if this can start to break through levels here pretty clear. 189 on the upside, 190 call it if you want to be safe. If we can start breaking through there, then we are very close to these all-time highs. Remember, as dangerous as sort of these headlines look, we are only about 3-4% away from these all-time highs in all of the major indices. So that's really the wrap up there. We're still sideways. So just like last week, we didn't want to get too bearish and jump the gun on a potential breakdown. We also don't want to get too excited here now that we're back to the upper end of the range, because we know markets in ranges like to stay in ranges until proven otherwise. So we do want to be careful there, and we have some of those supporting indicators like MACD and advanced decline. We got the VIX, we got the TLT. So there's definitely some things to chew on there and think about as you do your analysis over this long weekend. So that's the major markets. Let's jump to, or that's the the market environment. Let's jump to some other major markets. TLT we basically covered already. You can see it is back up to these prior highs. Notice the negative momentum divergence that's brewing here. I'm looking as a trade, as a possible tactical trade, to be looking to get short TLT here. For a swing trade, again, it would be tactical, it's counter trend, it's aggressive, so you need to know and be able to manage that risk and know what you're looking for. No position just yet, but am eyeing this as a potential short candidate in the coming week. If we go to GLD next, you can see GLD also kind of still holding up. It tapered off just a little bit towards the end of the week, but overall this trend is still to the upside. Got a little bit of negative momentum divergence there as well. We've talked about these over the past couple of weeks as you know, things continue. Both the TLT and GLD both have strong trends and momentum to the upside. They're really tough to chase, but again, they've been difficult to short as well. Might have some opening there in the short term. In both of those in the near future. Silver as well. Well, that's not silver. If we go to silver, silver's quite strong here. In fact, it's now starting to outperform gold. As you can see, silver on the week was up 5%, and you look at gold on the week and it was down. So this is actually a very significant week of outperformance here for silver. And take a look at the volume, the highest new weekly high volume for the year. And in fact, you're not going to find volume like that unless you go all the way back to almost let's see, if we look at that, you gotta go all the way back to almost 2012. You had a blip in here, so it's been about 7 or 8 years since you've seen this much volume kind of pour into silver, at least the ETF here. So that is really something. MACD continues to stretch. I mean, this is stretched. This is fairly or extremely overextended to the upside here, but it doesn't mean it has to stop. It just means that this is really cooking here to the upside. So you got to understand your risk and what you're looking to achieve if you're allocating at these levels. So silver still off to the races to the upside. If we go to energy next for oil, you can see this is pretty much a flat, slightly higher week, 2.5%. You can see still flat in this range though, underneath 12, above $11. Still kind of mulling around sideways here, so yet to be seen which way this is going to tip. And if we go to natural gas here, this had a strong week. It's moving back up into this range here. The lows are holding, MACD back in positive territory, so a little bit of bullish development there has been adding to the case here for the bulls in natural gas. Longer term, still in a very tough spot, but short term, it is certainly making the moves to the upside. So that covers all of the major markets. Let's take a look at some sectors now. Let's look at what held up best and what underperformed. Semiconductors were the strongest this week. They were up over 4%, but really, the picture doesn't really change too much in the sense that we are still more or less range bound here throughout the course of August. This was hit the hardest on the pullback in late July, early August. It is moving sideways here. This 115 is resistance. MACD trying to get back up into positive territory. Volume was light this week. Gap is very firmly in place from Thursday. So bulls working on trying to get that breakout and continuation higher. XLI here, second best performer of the week. Also back up to the upper end of August's range. We are still even longer term range bound since February, moving sideways here in between, call it, $78 and $72. So that picture hasn't changed, but we are starting to, see a little bit of outperformance there in XLI, which is something we haven't seen in quite a while. So it'd be interesting to monitor this in the coming days and weeks if XLI continues to perform. Last but not least, on the upside was XLB. This is the materials play here. Also seeing over 3% gain on the week. Nice gap and go sort of held. Still has this downward trend line it's trying to break out from. So this one here is actually kind of more in a breakout motion. Again, a lot of these other indices and sectors have more flat resistance. This is more trend line to the downside here, channel downward, and it is starting to break that slope right now. So it'll be interesting again, kind of like XLI, can this start to outperform on the upside once again? If we go to the downside here, it's IBB, which is still pretty much in no man's land. This really didn't pull back all that hard in August when the market started to pull back late July, early August. IBB really didn't make any new lows. It didn't take out any of the prior structure here. It's really just been pretty much dead money here since April. It is on the year. Let's see where it is on the year. It it is still up 6, almost 7% on the year. So it's kind of just dead money here, moving sideways. There's certainly a lot of individual names under the hood that are moving, but we're really waiting for this to wake up one way or the other. Needs to get above, call it 106 to the upside, or below 100 would start to make some significant moves. XBI is basically the same thing. It's just the equal weighted smaller biotech. IYR, third worst underperformer this week. Again, doesn't say much because there's no structural damage. It's still an overall market leader. It's just trading just off of its all-time highs. It just didn't go as high or rise as much as some of these higher beta areas of the market this week, but it is trading just at its highs there, back up to resistance. Last but not least for the underperformers is XLU, but again, not saying much because it is trading at all-time highs. It just didn't rise as much with some of the higher beta things this week. So that is it. That is the recap for this week. Thanks as always for tuning in and watching and listening to these videos. You can subscribe on YouTube, follow us on the Trade Risk. Have a great weekend. It's a long weekend. We'll see you back here on Tuesday of next week.